With so much negative press out here regarding COVID, let's turn the page on that and talk about some positive aspects about what's happening right now. Welcome to Simply Financial, where you can start planning, stop worrying, so you can live your life better. So we have an unprecedented opportunity right now as a result of the CARES Act that was passed back in March. Now, I've already shared one idea with you, which is involving the RMD, minimum required distribution. You don't have to take that this year, but I have an entire video all about that. Check below, you can find the link to go watch that. There's another opportunity that we need to discuss as a result of this CARES Act because it's going to expire at the end of this year. And it revolves around taking money out of an IRA if you're younger than 59 and a half. Prior to this year and the passing of that act, if you wanted to take money out of your IRA, there was a 10% penalty if you're younger than 59 and a half. Currently, this year, as a result of these circumstances, that penalty is waived. So now we can take money out and not have a 10% penalty. Now you might be wondering, well, why is this a benefit? I'll save 10%. Well, let me put it in around the lens of an IRA to Roth conversion. Now, there's a lot of bad things that have happened this year. A lot of people have been furloughed. A lot of people have lost their jobs. There's a lot of things that have happened negatively as a result of what's going on with COVID. And there's some opportunity there. You might find yourself in a situation where your income is significantly less right now than it should have been. Well, if you wanted to do a Roth conversion, IRA to Roth conversion, you could do that, keep the exact same level of income and put money into a tax-free Roth account. Buy this gift if you're younger than 59 and a half that the government has given you. So let me give you an example. Let's just say your income's $50,000 less right now. You can take $50,000 from your IRA, convert it to Roth, but the issue that we're gonna run into here is you have to come out of pocket for the taxes. And here's where this carpe COVID comes in because there's this huge opportunity we can take because they've gotten rid of this 10% penalty. So now we can take some money out of our IRA to pay the tax and we have no penalty, no governmental excess penalty to deal with. This is a huge opportunity. Now, I'm a huge fan of Roth IRA and here's why. It's tax-free. When you put money into a Roth and you want to take that money out at any time in the future, all of its growth, interest, income, everything that happens inside of that Roth is 100% tax-free. When you put money into a traditional IRA, you get a benefit on the way in, but all of its growth, income, interest, everything is taxable at whatever rates there are in the future. Right now, we're in a huge low tax bracket season. I mean, this is one of the lowest tax rates that we've ever seen in US history. Might be a time that we want to consider something like this. I love Roths because of the tax-free nature. Who knows where rates are going to go in the future, but we would have a tax-free bucket of money if you chose to do a conversion or have money in an existing Roth. All right, let me clarify a few things that might be confusing. There's two main issues that we have to deal with here. First is the tax. The tax has not changed. Not last year, not this year. If you want to do a Roth conversion, you will always have to deal with the tax. So I don't want you to be confused on that. There is this other issue of the 10% governmental penalty. That is exactly what we're going to be talking about right now and how we can take advantage of this CARES Act. The tax will be the same last year, this year, that's not changing. Penalty, that changes. So let me give you an example. Last year, if you wanted to convert money, last year was a good year. It was a great year, actually. So you had all of your income. But if you made $100,000, you wanted to convert Roth. Now you have to add the conversion onto your income. So if you have $100,000 of income and you wanted to convert another $100,000 from IRA to Roth, you have $200,000 of taxable income. Who would want to do that, right? You'd have to pay all that tax. And if you're younger than 59 and a half, if you didn't come out of pocket for the money, you have to take another distribution. So you have the tax on that distribution plus the 10% penalty. This is where right now we could solve some of this. Unfortunately, as a result of COVID, some of you have lost your job. You've been furloughed. There's situations where your income is significantly less because you took a pay cut. Here's where the opportunity comes in. Because your income right now might be significantly less than it was last year. So here's where that Roth conversion comes in. If you were scheduled to make $100,000, you might be on track to make 50, or you might have lost your job. I mean, I don't know what your situation is, but if there's a gap of where you expected to pay income and where you're actually going to pay income, we might want to fill that with an IRA to Roth conversion. And the benefit is, if you do that, we won't have to pay this 10% penalty this year. And this is unprecedented. It's never happened before. This is one of the very rare times where the government's like, you know what, I'm just gonna waive it this year because we have a very bad circumstance. So I don't know if this may or may not apply to you in your situation, if you've had a reduction of income or an IRA to Roth conversion is something you wanna do. But if it's a question that you have in your mind, give us a call. Let's get together to talk about it. It might make sense, it might not. But regardless of that, there is this awesome opportunity. Carpe COVID. Let's seize the day and find out if this opportunity makes sense for you. You're still here? That's great. Well, you might as well subscribe. You can leave now.